Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solution. Today, we're going to talk about the debt service coverage ratio. We're going to do a deep product dive. We'll get started here in about another minute and a half. I'll introduce our subject matter experts. But today, we're going to do a quick poll. We're going to talk about everything you need to know and how to originate a debt service coverage ratio program. We're also going to show you some great tools that we have for pricing and how to submit a pre-qual. And then last, but probably the most important, is we're going to teach you how to market, or show you how to market all the tools we have to help you market for this program and all of the great programs we have here at Angel Oak. So we'll get started here in a minute. This is going to be recorded and it will be sent out to you before end of day tomorrow, probably early part of the day tomorrow. So we still have a lot of people logging in. I love it. Hope everyone's having a great month of July, and looking to close out the year really strong. Logging in. Great. Give it about another 30 seconds, and we'll get started here. All right, guys, let's get started. Hey, my name is Jeanmonod, Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Been here a little over 9 years. Today, we're going to cover a debt service coverage ratio, and to help us, or not help us, really provide you guys the total package of AEs here. We've got Gerry Calderon. Gerry, please introduce yourself.
Hi, good afternoon, everybody. My name is Gerry Calderon. I've been with Angel Oak now going on 7 years. I service the Tampa Bay, Clearwater, St. Pete area in Florida. Been in the non-QM space now going on almost 15 years, going all the way back to the good old days. Like I said, I've been with Angel Oak going on 7 years now. Love non-QM and looking forward to making you guys experts in the non-QM space.
Yep. Thank you, Gerry. And I'm lucky to work with Gerry every day. And then Oscar Ungo, please introduce yourself, Oscar.
Hey, good afternoon, everybody. My name is Oscar Ungo. I'm an inside account executive at Angel Oak. I've been with the company going on 6 years now. And I'm always excited to talk about the debt service coverage ratio program because it's a great way for you to unlock opportunities to close more loans and turn some declines into approvals.
And we've heard, a lot of you probably recognize Oscar. Oscar's a pretty regular on these. So we appreciate, Oscar, you volunteering to do these all the time. So again, today, everything we're going to do today is on our easy to use, easy to navigate website. So this isn't a PowerPoint. This is live. This isn't recorded. So it's really going to depend a lot on the questions that you ask. And again, you've seen the experience that both Gerry and Oscar have here. Bring the tough questions. We'll answer them. So, and again, this is being recorded. We will get this out to you before end of the day tomorrow. And if we don't get to your questions, we will have your account executive reach out to you and make sure your question does get answered. Okay, so before we jump into the debt service coverage ratio program, we're going to launch a quick poll here. Who has originated a debt service coverage ratio in the last 12 months? And I think there's a statistic of 36%, all of you are voted, 36% of the homes in the U.S. are rental properties. And so this is a huge opportunity. We'll talk about some enhancements we've done on this. Let's see what these poll results were. Wow, 80, that's the highest that we've ever seen. We've been doing these webinars since September of 2020. Wow. That's the highest I've ever seen. 83% have not originated a debt service coverage ratio in the last 12 months, which is awesome because that's why you're here. So hopefully we'll teach you how and make you feel confident enough that you can close these debt service coverage ratios. So let's get right into the highlights of the program, Gerry. Gerry's going to take us through. I got to move a few things on my, there we go. All right, Gerry, can you see that?
Barely, but I can see it.
Get your glasses on like
no,
me, Gerry.
No, so investor cash flow is one of my favorite programs, if not my favorite program that we have here at Angel Oak. It's a great way for investors to grow their portfolio. It is a great way for investors to be able to continue to book their book of business and grow their book of business and not have to worry about a debt to income. The loan pretty much, if not, covers itself within the rental payment. And it's an extremely popular loan that we offer nowadays, especially here in Florida with the rental market. The investment properties are so popular nowadays that everybody's looking to do these loans. So I strongly encourage you, if you're not offering this program, that you jump on board and listen, and that you really pay attention to the things we're going to say, because we're here to help you grow your book of business and make you guys experts in the program. With that being said, the investor cash flow program goes down to credit scores as little as 680. Okay, we can go all the way up to 80% LTV on a purchase. Okay, all the qualifications are based on the property cash flow. What that means is we order a 1007 rent analysis on the appraisal, and that market rent analysis has to come in at the equivalent to the PITI payment in order for the loan to qualify. Simple as that. We do not need any personal income or any employment information required with the program whatsoever. So you do not need to have any job information or any income information on the program in order to qualify. Additionally, you do not need to have had any sort of investment property expertise managing investment properties in order to qualify. So keep that in mind. A lot of our competitors require you to have managing investment properties expertise in order to qualify. One of the best things about this program is that it can close under an LLC. So that is a great aspect. We close quite a bit of loans on a monthly basis that want to close under an LLC name. It is unlimited to the amount of properties that you can have. So, we can have unlimited amount of properties. Obviously, there's no DTI on the program, so that's not taken into consideration. The one thing about the investor cash flow program, the borrower must own a primary residence. Okay, there are certain situations where we can get around that. For instance, if they live in a big city like New York City and the rental market's extremely high and they're paying high rent area, but they're looking to buy an investment here in Florida, well, that would be a situation that we could do the loan for if they don't own a primary. But typically, they must own a primary residence in order to qualify for the loan. We can do purchase, cash out, and rate and term on the program. I might also add that we do delay financing on this program, which is huge because a lot of people looking to capitalize on their cash funds in order to recoup their funds. We can do delay financing on the program. We do have a 30-year interest-only option available, and the qualifications of the DSCR are based off of the interest-only payment. So keep that in mind, because that's pretty strong there, that you can qualify off the interest-only payment on the rent analysis aspect of the loan. Loan amounts greater to 1.5. We will require a second appraisal. So anything over 1.5 mil will require a second appraisal. We do offer non-warrantable condos also in this program. So keep that in mind. I know that's a very popular subject in today's lending world with all of the changes that Fannie and Freddie have made to the condos, and we can do non-warrantable condos on this program. We also do condo tells on the program that we offer, and we can do on the investor cash flow program.
Yeah, and Gerry, just touch on, I just scrolled down. I know Gerry just talked about condo tells. We allow people to close. Getting a little feedback here. Sorry, I don't know if someone's got a mic on or a phone on, but Gerry, talk about the business purpose loans, like for licensed originators who are not licensed in those states below here.
So one of the cool things that we can do here at Angel Oak is we can allow you to close these DSCR loans in states that you are not licensed in. So for instance, you have a Florida license, but you have a borrower that's looking to buy, and if one of your clients that you've done quite a bit of loans for is saying, hey, I'm looking to grow my book of business and expand to Georgia. Well, you now can offer this loan for them in the state of Georgia and be able to originate the loan for them as the loan officer and not have to be licensed in that state.
Yeah. And then just we added, go ahead, Jeff. Sorry.
Yeah, and we offer that for multiple states. I could get into the details of the specific states, but for that, I'd encourage you to contact your account executive to get more in depth into that.
Yeah, and if people can see that, I just highlighted the states below here. We've got Colorado, Florida, Georgia, Indiana, Louisiana, New Mexico, Ohio, Oklahoma, Pennsylvania, South Carolina, Washington, and Wisconsin. So, so just there, and then we just added non-permanent resident aliens for residents for this program too. So, what Gerry went through, and we touched on highlights, and we're going to teach you to be experts in this, but the biggest thing you have to realize is knowing that you have a Gerry or an Oscar that will help you take you through this. So with that said, Oscar, let's talk about, Gerry touched a little bit about the 1003, but let's talk about, what you like to see on a 1003, and more importantly, probably what you don't like.
Well, one advantage of working with Angel Oak is that you're going to be working closely with your account executive. For the 80% of you that haven't closed a debt service coverage ratio loan yet, if you've been hesitant of getting your feet wet with the program because you're not familiar with the product yet, you really just need to know the basics because your account executives are experts. So as long as you pick up the phone and you call us and you cover the scenario with us, we'll let you know whether it's something that you should send us to review and approve. And we're required to review your 1003 in credit. So if you send us a full 1003 in credit in PDF format, we'll show you how to do that shortly through the non-QM quick quote within 24 hours, and typically the same day. We're going to review it and send you your findings with hopefully an approved eligible and your next steps for you to request disclosures. So what we do like to see, well, let's start with what we don't need on the 1003. It's a lot easier. We don't need income and we don't need employment. Everything else should be on there. Like the primary residence's address, we do want to see assets on the 1003. We want to see the real estate owned. We want to know how long, if it's a refi, the subject property has been owned, so that we can gauge whether it's going to be delayed financing or whether or not we can use the appraised value based on how long they've owned the property. We need at least 6 months ownership in order to use the appraised value. Liabilities, if they merge over, they're fine, but like Gerry said, we do not look at DTI, and you'll want to have your full declarations page filled out as well.
Yeah, thanks, Oscar. Yeah, and that's, when people start saying, really, you don't need income, you don't need job, right? It just becomes, and we've had, we've done probably close to 100 of these webinars over the last 3 years. It's, one of the AEs says it is the easiest loan to close. The only thing is the appraisal. So, Gerry, talk about credit. How many trade lines do we like to see, and how long, and what the activity, if you don't mind?
That's a great question, John. So for trade line requirements, we need either 3 trade lines reporting for 12 months or 2 trade lines reporting for 24 months with activity in the last 12 months. So that's the big trade line requirements. I would like to add something to the investor cash flow program that most people don't realize. A lot of times when you are, and this goes back to what Oscar mentioned as far as working hand in hand with your account executive, but a lot of times what you don't realize with this program is that you can simplify your loan application 10 times more than going in the traditional way and trying to do a full doc loan. And the pricing difference isn't going to be as drastic as what you think it would be in the full doc world versus the investor cash flow. And the only reason I mention this is because I just had a loan that I was looking at this morning that came through as a full doc investment property this morning, 80% loan to value, and they were looking to do a purchase on it. And I was looking at it and I was trying to make the DTI work, and I was going to be right around 48, 49%, which our max back end is 50%. So it was going to be tight. I looked at it and I priced the loan out as a DSCR loan, and believe it or not, it was a quarter difference higher in pricing. No stress of having to worry about, is the underwriting going to kill my DTI? Am I possibly going to risk losing a loan? And now you can close this loan under the DSCR investor cash flow program less time than you probably would need required for a full doc loan. So just something to keep in mind as far as that goes.
Yeah, great point, Jerry. And with all the LLPAs that, Fannie and Freddie are putting on investment properties and even second homes for that matter, but this is for investment properties only. It's not too far off pricing and a lot less documentation. So let's get into the questions. We have a lot of questions coming here. The second to last bullet, Kristen is asking, your second to last bullet point, can we in California lend in those highlighted states? So Kristen, if you're in California, yes. If you're not licensed, go ahead. Oscar, I'll let you do it. I'm not the subject matter expert, you are. So
Yeah, you can.
yeah. So yes, Kristen, you could close a debt service coverage ratio loan in those 10, I think there's 10 of those, 1, 2, 3, 4, the 10 listed states. So yes, you could. So hopefully that helps you out. A couple other questions. Jerry, you mentioned it when you talked about the highlights. Talk a little bit more about delayed financing.
So delayed financing occurs when the borrower is looking to recoup their funds in some form or fashion. Okay, so we can do delayed financing. Borrowers was pressed with time, needed to close the property ASAP in order to not lose the property. They decided to pay cash for it. Now they want to come back to us and they want to recoup their funds. They could do up to 75% LTV. And we can recoup their funds by doing delayed financing going off. We'll need to source and season the purchase funds for the transaction. However, we can recoup their funds for them and get them into a traditional loan. Another situation would be if they receive some sort of a gift of some sort in order to recoup the funds for that gift. We can also utilize delayed financing in that situation. If they have a hard money loan, okay, and they got an interest rate that's going to balloon at some point, and they want to get out of that loan, and they had to take that loan in order to get the loan closed immediately. Now they can go into a 30-year fixed traditional DSCR loan with us and utilize the delayed financing also.
Yeah. So, and Oscar, talk about, and Michael, hopefully that answers your question there. Thank you, Jerry. Oscar, talk about cash out, because we're starting to see, obviously appreciation. People, want to continue to build their portfolio. Talk about cash out and when you can use the appraised value specifically for cash out.
Absolutely. Before I forget, though, I did want to mention a feature Jerry mentioned there. You mentioned gift funds. So that's a feature that's allowed. And so as long as your borrower contributes 10%, we allow gift funds. So the rest can be a gift. The gift funds cannot be used towards reserves. Your client has to contribute 10%, and the 6 months of reserves must come from them. But the rest can be a gift. So that just opens up opportunity for a lot more loans. Now, in cash out, you do need a minimum of 6 months. They do need a minimum of 6 months ownership of the property in order to use the appraised value. They can cash out up to 75 LTV with a 700 FICO score. And the fantastic thing about refis is that we can use the current rent on a refi. So it's really easy for you to structure this loan, because you just have to ask for the lease agreement from your client, verify that they've received that rent for at least 3 months, and then take that rent. And then shortly, when we show you how to price out a loan, you're going to take your rate, you're going to put together your principal and interest, taxes and insurance, and any HOA dues, and then you'll just run the DSCR formula, which is rent divided by PITI or PITIA, to check what your DSCR is.
Oscar, touch on that, because one of the things we get when we scroll down here. So how do you calculate debt service coverage? This is on our website. So Oscar, just go over some of those highlights there, if you don't mind.
Yeah, so we have tiers to calculate DSCR. The first Jerry mentioned, which is if you break even or if you have positive cash flow, that's going to equal 1. So to use an example, let's say your rent is 1,000 and your payment is 1,000, then you're break even at 1. Or like the example on the screen where you have 1,100 divided by 1,000 PITIA, you're at 1.10. That's positive cash flow. But we like to say that this is the only loan program that's nearly bulletproof, because even if the DSCR does not break even, so meaning that you have negative cash flow, you still have an opportunity to get that loan closed as long as your client has a 700 FICO score or greater. So if they have a cash flow as low as 0.8, then as long as they have a 700 FICO score at 75 LTV, we can structure that loan. And even if it comes in at less than 0.8, we can get that loan closed for you too, as long as they have, as long as the LTV is structured at 70% with a 700 FICO.
Yeah, thank you, Oscar. Yes, this is a live webinar right now. So I had a question there asking if this was recorded. This is live. It will, however, be recorded and will be sent out to you before end of day tomorrow. So, you know, what makes this great is you can ask us questions on the fly here. This is not recorded. So, Gerry, can we close in a 1031 exchange?
You can. You can.
Thank you. A couple other questions, little questions coming in about delayed financing. Yeah, so Oscar, I'll go back to you. Betty Ann is asking about, will it be based off the purchase price or appraised value? It's a good question.
Delayed financing is going to be based off the lesser of the purchase price or appraised value.
Yeah, so thank you, Betty Ann, appreciate that question. Gerry, you mentioned this a little bit when you were going over the highlights, and give an example almost. Is there no limit to the amount of properties you can own? Because we know Fannie and Freddie only allow you to finance up to 10, right? So talk a little bit about what we'll allow, and then some examples of maybe an exception you've received too. So.
No, absolutely. So I mean, like you said, we don't care the amount of properties that they have, and we will allow up to 5 properties with Angel Oak. Now, I will say I have gotten in the past exceptions on that. If we have a good borrower that's well qualified and we feel strong about their qualification, then I've gotten an exception to go as many as 8 properties before in the past. So that's pretty strong there. Yeah,
that's you know, and I should have said this earlier. 30% of the loans we close here at Angel Oak don't meet our guidelines, and it's because of Gerry and Oscar and all of our other great AEs across the country. They know those second, third, fourth, fifth level questions to ask to say, okay, I think we've got a deal here. So again, that's why the subject matter experts. Hold on, a lot of questions coming in. Oscar, do we do manufactured housing on this program?
I had $1 for every time I get asked. We don't, unfortunately, no.
Yeah, sorry, Beth. Hopefully that answers your question there. Let's see. Sorry, guys. Got another question we usually get. Talked about mixed. We talked about the 1031 exchange. Gerry, you also talked about this. You know, which I think is important because we talk about this a lot of times in the context of a seasoned investor. You mentioned it, Gerry. We'll allow a first-time investor, right? Yeah.
Oh, 100%, 100%. Quite a bit of the ones that we get are people that are looking to get their first investment property, and as long as they own a primary residence, they're able to do so, putting 20% down. If they got a 700 or higher, we can go to that 80% loan to value and get them their first investment property, and the loan pays for itself. So that is a great part about the DSCR loan, is that people want to call this a no-doc loan, but in reality, it's the safest loan out there because it's paying for itself. So to me, it's a strong loan from the investor side of things.
So Carla's a new loan officer. So Carla, this is going to be recorded, Carla. So, you know, this recorder will be sent out to you before end of day tomorrow. So you don't feel like you have to take notes. All this information is on our website too, from a standpoint of highlights of the programs. We're going to talk about how to get a pre-qual to us. We're going to talk how to get rates on this, and most importantly, we're going to show you how to market this. So don't worry about keeping up, Carla, with taking notes. This recording is being sent out to you. Oscar, talk about non-warrantable condos and even condotels too.
Well, there are a few things I can, when someone calls me and says that they have a non-warrantable condo, first question that I ask them is what classifies this project as non-warrantable. Many lenders are going to have different appetites for non-warrantable. Our appetite for a non-warrantable condo will be a condo project that may have high investment concentration. We don't allow it when a person or entity owns 20% or greater. But if you have 100 units and 100 of them are non-owner, we're fine with that. Sometimes you may have some litigation that is not structural in nature that we can get by too. You may have a condo project that has low reserves or short-term reserves or no reserves, which we're fine with as well. And we have our own non-mortgable condo questionnaire, which you can find directly on our website. It'll answer all key questions, and it also provides the answer key. Now, as Condotel is extremely popular in some states along the coast, or in vacation areas, and we can finance Condotels at 75 LTV with a 700 FICO score, and the minimum debt service coverage ratio for Condotel is 1.
I don't know if we answered this already, Gerry. Reserves, what kind of reserves? I don't know if we answered it, but I'll ask it again. What do we require for reserves?
No, I don't think we did, John. And the reserve requirement is 6 months for the subject property only. So yes, that's correct. The subject property only. We do not require reserves for all of the properties that they own.
Which is a great point, Gerry. A great point. Oscar, we're getting a question here from Bill. Bill, I think, has been on a couple of these webinars, and welcome back, Bill. So, Oscar, talk about the LLC and the seasoning of the LLC, if you don't mind.
Sure. Whenever you have a client that wants to vest title in their LLC, ask them how many parties are on the LLC. We'll require all parties on the loan, but let's say that they don't want the other members to be on the loan. Well, then we have no seasoning period for how long that LLC needs to be open. So they can create a new LLC and then vest title in that LLC.
Okay. Thank you, Oscar. Gerry, is there a minimum square footage?
There is a minimum square footage for the DSCR loan of 600 square feet. However, we can, like you said earlier, 30% of our loans are exception driven, and you'll probably hear us say that quite often on this call. So if we have a scenario on something that is less than that, we can always see if it's something that they'd be willing to make an exception on.
Yeah. So Kate, hopefully that answers your question. And Gerry, she thanks you in advance for your answer. So, and I'm going to keep it at Kate because I'm not sure I can pronunciate your first name, Kate. But thank you for attending, Kate. Appreciate it. So this is an interesting question, Oscar. Do we extend the pre-qualification letter to the borrower?
We don't. We don't contact your client. The information on there is really it's essentially like when you run DU and LP, you're going to get your findings. That isn't a pre-approval letter that you want to send to your customer. So what we send you is information for you to digest and then deliver to the customer.
Yep, thank you. And hopefully that answers that question, and it did, so thank you. Dan, we do allow the LLC, we just talked about that. So Gerry, Debbie's asking about cash for reserves, cash out being used for reserves. It's a great question.
Great question. And the best answer I can give you is yes, sir. You sure can. You can use cash out. You can use cash out for the reserve requirement.
Yep. A couple more questions in here. Oscar, seller concessions, which we're starting to hear a little bit more of those, right? So
we are up to 3%.
And David, we can close in a personal name, yes, or the LLC. Gerry, talk about a vacancy factor. This is a really decent question from this. Is do we use a vacancy factor for this program?
Well, that's kind of a two-tier question, but so as far as the property goes, if it's a cash out transaction, the property needs to be vacant. Okay. If it's a purchase transaction, then obviously that's a different story. But it all depends on exactly what we do need the property to be vacant on a cash out transaction.
Yeah. A couple other quick questions, and then we'll move over to how to get us a pre-qual and stuff like that. Talked about first-time investors, LLCs, delayed financing. Talked about selling concessions. Let's see what other questions we have coming up here. Oscar, talk about non-permanent resident alien, please. I know we just added it, so.
Yeah, we just added it, and there's a 5% LTV reduction from the maximum LTV. The minimum debt service coverage ratio is 1, and then we'll provide all the acceptable visa types to you.
Yeah, so great, and thank you, Dan. We appreciate you participating here. Let's move over. Property on a cash out. We got another question. If the property on a cash out loan has to be vacant, how do we pass the DSCR? I don't know, Jerry, you want to talk about maybe cash out and vacant properties? And
So what was the question again, John?
on a property cash out, can the property basically can the property be vacant? I guess that's the.
No, unfortunately, it cannot be vacant. Yeah.
So let's say that your client we're using delayed financing and your customer just purchased that property. We do have a 60-day window where the property can be vacant, but after that it has to have a tenant.
All right, great. All right, we're gonna cover foreign national because that was part of, and that also falls underneath the debt service coverage ratio. So Oscar, let me move some things around here. Sorry, guys. And keep the questions coming in because what we'll do, we'll have your account executive follow up with you. So Oscar, give us some highlights of a foreign national, please.
All right, the foreign national program. So our definition of a foreign national is a person who lives and works outside the United States that is purchasing an investment property in the United States. It falls right into our debt service coverage ratio program. It's easier because there is no credit required. So the 1003 loan was really easy to fill out already with the standard debt service coverage ratio loan. There is going to be no income or employment again. Now, caveat is that the minimum DSCR is 1, so the ratio has to be 1 to 1. The really important piece that's going to impact your timeline for closing is the seasoning of the assets. The seasoning period is 60 days, and 30 of those days have to be in a US FDIC insured bank account. Okay, so assets must be sourced and seasoned for 60 days, and 30 of those days must be in a US FDIC insured bank account. We do require 12 months reserves on the subject property only, but those funds can stay in the foreign account. They do not need to be transferred over to the US. Closing in an LLC is permitted. There's an ACH auto payment form that is required in underwriting. We do require the eligible visas that we have here, but if your client happens to be in a country that's on the visa waiver program, then we do not need the visa. Gift funds are not allowed, and loan amounts go up to 1.5 million.
Yeah, thank you, Oscar. So it falls under, our debt service coverage ratio. We've had it different before. We put it under here. This is so much easier. It's really, it's just a so much easier program, not having to create the credit like Oscar said. And it's just that, Jerry, anything to add regarding foreign nationals? And then we'll answer a couple of questions here. And then
no, I mean, like you said, John, we really simplified the program the way that we do it now and turned it into a DSCR loan. We used to have credit reference letters. We used to have the VOE and employment information and all that, which we do no longer require any of that. So it's really a simple loan for the foreign national. The biggest thing is finding out exactly where they're from. Do they have an acceptable visa, or are they from one of the visa waiver countries? And the DSCR is treated as an investment property, as simple as can be.
Yeah.
By the way, in case you're just listening in and you can't see the screen, I didn't mention this, but the max LTV on the foreign national program is 70%.
Yeah, thank you, Oscar. Oscar, we got Barry asking a little question here on a cash out refi. Are cash out refi property eligible for short-term? Can you do cash out for a short-term rental property? Sorry.
We can do cash out for short-term rental property. The max LTV is going to be 70%. They have to have a 700 FICO score. And we need, for example, let's say that they are generating their short-term rental income through Airbnb. We're going to want the 12-month statement from Airbnb and at least 2 months of rent receipts from their bank account.
Beautiful. Thank you, Oscar. So Gerry, take us through, people always talk about how do I get rates? How do I, do this? How do I get that? Take us through the pre-qual, right? We talked a little bit of pre-qual, how long it takes. I'm going to put in some information here, Gerry, and just take me through the rest of, our average borrower in this program is about I'll use a 740 score.
Yeah, it's really our non-QM quick quote on the website is very user friendly. I mean, it's awesome. It's so cool that even my 8-year-old daughter likes to go on there and price out loans sometimes just to see. So it can be done by anybody if that says anything. But you really go to the website, angeloakms.com, and then you click on the non-QM quick quote on there. And then you're just going to put in your scenario, just like as John's doing on here. The first question it's going to ask you is a channel type, which you're going to select broker 99% of the times. And then you're going to put in your loan amount. Credit score, we always on the DSCR loan see high credit scores because these investors typically have good credit, or if somebody's looking to get into the investment world, they have high credit. Loan to value in this situation, we put 75%. You always want to put the subject property state on there. So this way we know if there's a licensing requirement. Housing history, this is where you would put if they had any kind of mortgage late on there, okay? And it's very important to do so because this would identify whether the loan qualifies or not. We can have mortgage late on the DSCR program, the amount of them that determines the LTV and the qualifications for it. So do keep that in mind.
You just took the words out of my mouth, Gerry. That's usually a question we get or we cover. We do allow a mortgage late. What is it, the last 12 or 24? Sorry.
It's 1 times 30, I believe, in the last 12 months, and then 2 times 30 in 24. Yes.
Yeah.
Sorry, Gerry.
So that's there, and then here where the income or income documentation, that's where you're going to want to select the DSCR investor cash flow. Investor cash flow is our name, Angel Oak's name for the DSCR program. The DSCR, I always encourage you to put it at the 1 to 1.75, unless you already know that the DSCR is not going to qualify for whatever reason, then you can put that DSCR in there. The investment or occupancy type, you're always going to select investment property for a DSCR. You can't do a second home or an owner occupied, as we touched on earlier. And then you're going to want to select if you are licensed in that state, just as John did there, to make sure that everything is going to populate for you. Property type, you can select. We'll go up to a 4 unit on the DSCR loan. So in this particular instance, it's a 1 unit. It's a purchase. DSCR investor cash flow. We've got the investment purposes, and then just as you stroll down, you leave it on a 30-day lock. One thing I will mention, it does have a standard 3-year prepay on there. We can go up to a 4-year prepay on the program, and it will give you cheaper pricing if you select to do so. Anything less than 3 years, you will have a pricing hit to the rate on the program. You can waive escrow depending on the credit score. And then, like we mentioned earlier, you have the interest-only option that's available also on the program. Then you select your compensation type, whether you want to go borrower-paid compensation or lender-paid compensation. This is where you would select that. Today's world, I strongly encourage borrower-paid compensation on most of the loans that we do. Just due to the nature of the economy and the way things are nowadays, I would encourage you to go borrower paid on these transactions. And then just below that, as simple as that is, you're going to see that you requested an LTV of 75%. It's actually telling you you can go up to as high as 80% LTV if you choose to. Your interest rate's 7.99 at a par rate. Your bankruptcy seasoning for any sort of a bankruptcy or a housing event, short sale or foreclosure is 48 months. It'll tell you that your reserve requirement is 6 months there, and then it gives you the lock duration. So pretty self-standard. Go ahead.
No, sorry. You mentioned it earlier, Gerry. You got a 7.99 rate on an investment property where you haven't provided income, right? You haven't provided job information. You're not required to have tax returns and lease agreements for all the other properties you may own, and it's a 7.99 rate. I mean, easy peasy.
And I'm going to tell you, John, I'm going to close it for you in 14 to 17 days. You're welcome.
Yeah, and I'm using that. The next webinar you're not on, I'm using that. Even your 8-year-old daughter can come up with a rate here. That is hysterical. Sorry. So Gerry, we didn't say this, but you don't need login credentials to run this, and this is available 24/7, right? And it's really easy to use, and we've expanded it a little bit because we want to get more accurate, right? So we want to get so it's just a great, easy tool to use. It's available on our website 24/7, no credentials required. So easy peasy. Thank you, John.
Not to mention, John, I know this webinar is solely based on the investor cash flow DSCR program, but this non-QM quick quote prices out our full menu of loans that we have to offer. So you can go on there and price out bank statement loans, full doc loans, anything that you're looking to do also. So
yeah, Gerry, that's a great point. It's available for all the programs, the great programs we have. And now I'll put a shameless plug in. Thank you, Gerry, for that. Next week, we're doing a deep dive into our bank statement program. So the same day, next Wednesday at noon Central Time, 1 o'clock Eastern Time. So Gerry, let's talk about how they can get a pre-qual to you.
So once you've priced out the loan, like I always tell my brokers, you've priced out the loan, you've discussed it with the borrower. Borrower is on board and he decides he wants to move forward. Then you're going to click on the blue button there that says View Rates. Okay. Once you select that View Rates button, here's where you're going to select your pricing. Okay. Like I said, you can have the option to go on borrower paid or lender paid on these transactions. But in this case, John has selected the par rate 7.99. I'm sure he's doing this as a borrower paid transaction and going to charge his fees on the front end and charge up to 3%. So keep that in mind. Once you select that option on there, then it's going to take you to step 2 of the quick qual. Okay. Here you can either upload your MISMO 3.4, which some accounts choose to do so, or if you do not like to want to go through uploading your MISMO, you can just go to the step 3 down at below where it's going to say next. And then here you're going to fill out all of the information, select your account executively accordingly, your company information, loan officer, your NMLS, phone number, email, and the borrower's information. And here's where you're going to drop a 1003, remember, a complete full 1003 with no income on the 1003, and then you're going to drop the credit report. We really do not need a 1008. It's really not necessary, so do not upload a 1003. And then down below, you're going to put any comments that you may have looking to close under an LLC, or whatever other comments you may have on there looking for delayed financing, whatever it may be, you're going to put it there so that your account executive can pick up on that. If you have any sort of history, credit history, then you're going to select those below. Like I said, 90% of these borrowers do not have anything of that sort. And then any additional comments that you want to include, you're going to submit that. That's going to come over directly to your AE, your account executive, will receive that. Within a 24-hour, most of us do them within the same day. I know Oscar probably does, and I know I do. You will receive that pre-qual back that same day or within a 24-hour time frame. And one thing that we do here at Angel Oak is we're very diligent in our pre-quals. One thing we do is we make sure that if we put our name and we stamp it, it's a loan that's going to be able to be done and is going to be able to qualify exactly the way that we've structured. And it's as simple as that, John.
Yeah, no, Gerry, but you glossed over, but I want to point out, you're basically, Gerry, Oscar, and all the great account executives across the country are doing a pre-underwrite, basically, right? And as Gerry said, we understand how all your referral sources, the borrower, the referral sources, what they mean to you. And, when Gerry and Oscar, anyone puts their name on a prequel, that's a pre-underwrite. They understand the chain reaction that if they make a mistake. And I don't know if it was Oscar or someone else who says, your AE is your confessional booth. Tell them everything you know up front, because they're going to know how to navigate through the system and the next questions to ask in order to say yes. They prefer to say yes, but sometimes they have to say no, and it just helps you in the long run versus someone just saying, give it to me, we'll figure it out when it's there. That's not what Gerry and Oscar do here. So, Oscar, anything else on prequels?
Yeah, that confession box is right at the bottom there. If there are any notes that put it right at the bottom of the screen. We accept TBDs as well on this product, and the 1003 doesn't have to be signed either. So if for any reason your system, when you print out a 1003, is going to trigger disclosures, you do not have to have you don't have to have the subject property address on there. You can type it in to that box for your account executive before you hit submit.
Yeah, those are great points, Oscar. Gerry, what do you do? There's another question here from, and it's a really good question. We know the rent comp analysis is going to come from the 1007, right? What do you do, Gerry, sometimes when you're doing a prequel for someone, just, even if it's a cash out? I mean, you use Zillow, right?
I go as simple as Zillow and go on there, and I do it on all transactions, especially here in the Florida market. I go Zillow, but what I will tell you guys, you have a good communication and a good relationship with your realtor. Have a good understanding of the area. Have a good understanding of have the realtor tell you of some of the market rents in the area that they're aware of, so that that way you're that much more comfortable. But Zillow is as simple as it gets within that.
Yeah, so Adam, hopefully that answers your question there, and thank you, Gerry. So, we're getting close to, I don't know what time is it. We're about 10 minutes from concluding this. So we're gonna, and this is, Gerry, myself, Oscar, this is what we get the most excited about. And it's also, I'll be honest, this is also what I get a little disappointed about, because, no one takes us up on this. So, Oscar, let's talk about our marketing portal. Probably, we serve underserved borrowers. Our portal might be our most underutilized portal. But go ahead, Oscar.
We talk about the marketing material that's been put together. It's completely customizable, and so in order to get there, completely free. As long as you're signed up with Angel Oak, all you have to do is get your profile set up, and then the marketing portal is accessible to you. So John's going to log in shortly, and he'll show you how to get in there. But it doesn't cost you anything. All the material is completely free. But what is the cost of not promoting the program? I like to say that because I've worked with people that are seasoned loan officers who have never closed a debt service coverage ratio loan before. And I've worked with people that are completely green in the industry. And in order for them to build their business, they decided that they were going to promote something that was going to separate them from the pack. And all they did was log in our marketing portal and post a flyer on a investor Facebook group. And they suddenly, the phone started ringing, and they started taking applications. And those were the first loans that they closed. Off the top of my head, there was a loan officer whose first multi-pack of loans. So it wasn't just one loan. It was multiple loans for one borrower using the debt service coverage ratio program. And those were the first loans that they closed all at once. Some people Some people only close one loan at once. They close multiple loans for one client. So as soon as you sign into the portal, all you have to do is click on Marketing Portal, and it's going to show you the cascade menu of different options. You have presentations, the whiteboard videos, the social media content, as well as the flyers. And when you click on flyers, it's going to open up the new screen with your menu of flyers for every program and scenario that you can think of. They've also been designed for the audience that you're going to be promoting to. So we have flyers for CPAs, we have flyers for realtors as well. And when you choose the flyer that you want to use, in this case, it's going to be the debt service coverage ratio program. Remember, we call that investor cash flow. It'll open the flyer. And again, this is completely customizable. And when you sign on, it's going to be private. Okay, so this is just what you're looking at right now is the AE training portal. So, someone was presenting earlier and they input this information, but yours is completely private. So you input your information on here. You can upload your picture. I've seen this co-branded before. So you can co-brand with a realtor and enter their information too. And you have places for your photos, for your logos, and your contact information. Then download it directly to your desktop after you've clicked see changes, and your flyer's done. So you are your own marketing team. It's extremely simple to do.
Yeah, and Oscar, you mentioned it here. Once you do it once for this flyer, it pre-populates for all these flyers.
Exactly.
So, if I was a loan officer, I'd put a drip campaign out there of these flyers every week. I've seen these. I've actually seen loan officers put these at open houses too. It's good, but you got to do it. And it doesn't take that long to fill out. So great, Oscar. Let's go want to talk about social media?
Yeah, let's talk about the social media content. So all of that's already been designed for you. The captions have already been pre-written. There's no need to reinvent the wheel. If you're going to be targeting a campaign towards borrowers, then we have the captions for borrowers. If your target audience is a realtor, then we also include them for realtors as well. Every picture is in the dimensions that are required for, let's say, the social media app that you're going to be using, whether that, for example, is Instagram or Pinterest. That way, it is presented in the best possible way and quality. And something that's also extremely, we talk about the marketing content being underutilized, but something that is extremely in demand that I'm sure Gerry is doing a lot as well. We're getting a lot of requests for presentations, and something that we do on a weekly basis. Our calendars are booked with realtor presentations. Our loan officers are requesting that we present along with them to teach their referral partners how they can grow their own business using non-QM programs. And we cover each product. We already have the slides that are available for you through PowerPoint. Again, this is completely unbranded. We have a short version. We have a longer version. We can schedule the date and time. Your AE, some of them can go in person. And if not, we completely recommend Zoom because that makes it easy. We find that you have a larger retention and you have more people that attend when you go through Zoom because there are less reasons for people not to show up. They don't have to think about traffic. They can actually, if they happen to be in a car, they can sign in and listen in to the presentation. So we can provide the Zoom link if you don't have Zoom. All you have to do is set up the date and time. And we even have a flyer here that you can send out through a drip campaign for the invitation.
Yeah, so, and Adam's been active with us here today. So Adam, hopefully I'm pronouncing your name correctly. Yeah, there's also, you can download this PowerPoint and it's unbranded. You can brand it with everything yourself. Oscar, Gerry would go in there. They don't say anything about Angelo. Adam, I'll use your name. Let's say you schedule a realtor presentation and Gerry goes in there with you and he's going to talk in detail, as much detail or as high level about the programs. And he will say, I'm just one of Adam's investors. And after he gets done talking about the debt service coverage ratio program, he's going to say, But what do you need to do when you find that investor or that borrower that wants to be an investor? You're going to contact Adam, and Adam's going to contact me. So it's a powerful presentation. I always say, 9% of the deals we close on our bank statement deal are actually realtors. So you get 12 realtors in a room, you're going to get one of their loans. And that statistic's probably the same with the debt service coverage ratio program. So, but hey, just for, this is being recorded. This will go out before end of day tomorrow. If we didn't get to all these great questions, we will have your account executive reach out to you no later than noon tomorrow. But we are at the end of this presentation. So Gerry, Oscar, anything in closing that you want to just offer to everyone out there?
Yeah, I had a loan officer tell me once, Oscar, I don't think I can walk into a real estate office and I'll walk out with a loan when I discuss the investor cash flow program. So for those of you who are unfamiliar, well, for all of you who attended today, my my advice is find out who your account executive is and either schedule a call with them, as soon as possible. We'd be more than happy to schedule calls with you to make sure that you're an expert on the product and schedule presentations with them as well.
Yeah, thank you, Oscar. As always, appreciate your time. Gerry, anything in closing, Gerry?
Yeah, just to piggyback with what Oscar said, guys, at the beginning of this call, we started with a simple asking how many people closed the DSCR loan, and the percentages were 80% that had not. So if you can imagine of your book of business out there that aren't utilizing this loan, for instance, your realtors, what's that percentage that has never utilized it? Wouldn't they want to be part of an investment portfolio or a book of business of that sort? This is a loan that will help you grow your market no matter where you're at, no matter what stage in the marketplace you are in. And one of the best things about Angel Oak is just in this panel alone, you have 20 years of experience. Okay, all of our AEs that we work with here have a long history in the non-QM space. These aren't just AEs that have bounced around or been from place to place. These are AEs that are knowledgeable and know exactly what they're doing. So to me, we have some of the best AEs across the country. I would utilize them to help you with these seminars. I would utilize them to help you with these loan programs and help you grow your book of business. You'd be a fool not to use Oscar if he was your AE. So with that being said, it's been a pleasure working with you guys, and hopefully we can see more of you guys in the future.
Yeah, Gerry, very, very, very well said. So a couple of things. Again, this is recorded. This will go out before end of day tomorrow. If we didn't get to all your great questions, we will get your account executive to reach out to you. There is a small survey, just things we could do different, things we could do better. Please, provide us some feedback. But on behalf of Gerry, thank you. Oscar, thank you. Thank you for everyone for joining. On behalf of everyone at Angel Oak, if you closed the loan with us, thank you very much. If you haven't, please give us a shot. Hope everyone has a great rest of their day, great rest of July, and a great, strong finishing rest of your year. Thank you, everyone, for attending.
Thank you, John. Thank you, Oscar.
Thanks, good seeing you guys again. As always, thank you.
Yeah.
How am I closing this? Thanks.